All right, everybody. Um, I want to talk about how I have found success understanding the charts and reading the charts and reading price action. Right. So, if you follow me and you see a lot of my Instagram posts, you'll probably think that this looks a lot different. The setup that I'm, the way that I'm looking at different levels and zones, but um, when this is basically how I look at any chart in any instrument, except for indices, right? So if I'm looking at an index like the US 30 or the Nasdaq or the Russell or the S&P, I will typically look for, especially if it's a US index, I will look at more of a day trading style approach where I'm looking for a short term move and a short term setup, and I'm not looking for um, catching a large swing and a large move that lasts, sometimes over 10 or 15 hours, right? So gold is really my favorite thing to trade as of recently. I know for, like I said, day trading purposes, I really love the US 30, but with gold, I have found a lot of success in identifying key levels and zones and trading, finding entries based off of those zones, right? So that's just kind of what we're going to generally go over here on gold, right? So I typically like to look at the anywhere from a 15-minute, 30-minute, or an hourly chart for execution. But regarding analysis, right, we look at every time frame, right? So, pretty much up to daily charts and weekly charts, right? So if we're looking at just recent price action as of earlier this morning, right? This is actually an entry that I took this morning, but for the sake of the video, I'm not going to have it really shown on here. So how do we look for zones, right? So the way that I look for zones is I look for areas on a chart, regardless of the time frame, right? Because a lot of times you'll notice that zones kind of sort of transcend time frames, right? And if a zone makes sense on a daily chart, it's also going to be applicable on a 4 hour chart, right? And vice versa. So, once you get down to like a 1 minute chart, that's where, unless you're trading explicitly on that 1 minute time frame, it's not going to be as important in the grand scheme of things on a higher time frame, right? So, what I look for is an area, right? When we zoom out, and I look for an area where we have a lot of touches in a certain level, right? A lot of areas where we have relatively, it doesn't have to be precise because something that we need to get out of our minds when we're learning how to trade is trying to have all the conditions perfect for us, right? Because I know you want to look for an ideal setup, right? You don't want to take a stupid trade if it doesn't fit your criteria. But what you need to understand is the circumstances are not always going to be perfect for you. A lot of the times, I mean, pretty much all the time, they're not going to be exactly perfect, right? You will sometimes get one of those setups where everything just kind of goes in your favor and goes your way, and that's great. But the market, you can't predict, right, in a sense, exactly what the market's going to do. You just have to go with what it gives you, right? So for instance, this is a great example, right? So we go back here, and again, this is on a 30-minute chart, right? We have all these different instances of price coming and respecting this level, right, rejecting off of it, right? And we finally break through. And then when we break back up, right, again, we come back down, right? And what I like about this is part of the reason I took this entry. We'll get down to this zone in a minute here because that's part of the key for this trade. But one of the things that made this a really attractive trade opportunity is the fact that, right, so this is very obviously a key level. If we go to an hourly chart, we will still see this, right, as a key level. It actually looks a little bit more precise on an hourly chart, right? So see, we have all these little instances where we are respecting the zone. So whether or not we think that this zone will be tested as support or as resistance, like it was here, but it broke through, we just need to know that this is a key level, okay? Regardless of what we think about bias in terms of our direction, right? We just need to know and identify that this is a key level that we need to show interest in regardless of what our bias is, okay? Whether we thought we were going to sell off here or break through like we did, we just need to know that it is an important level to pay attention to and to keep marked on our chart. So when we come up and break through, right, initially what I did is I went long here, and right when we came back down to retest, and we did wick a little bit, but the interesting thing is the rest of the day is a big test of patience. The rest of the day was extremely slow, right? We just kind of move sideways. But what I like about this is this price action here, right? So we push up through our key level, right? And I know I got in right at the first retest, but this price action here up until about this point, right around the market open this morning, because that's what gave us the volume to have this big candle to the upside, right? So what I like about this is it's this gradual, slow decline into our key support level, right? And so in these candles down here, especially right here, we really establish a nice support level to justify a long position, right? Right about here. And so even though this trade, took a while to really move in our direction, nothing fundamentally changed about the price action, right? We still came down into this level and respected it as support and pushed up, right, off of the zone, right? But again, why was my bias here bullish? Well, if we look down here, I want to take our attention to, let me look at the daily chart initially. Okay. All right, so here we are. So this is our daily chart on gold, right? You can see we had a huge spike up there a while ago. Lots of world events going on, right? That's another thing that really affects gold is geopolitical events, wars, that sort of thing really affects gold, right? So here, right, definition of a daily zone, right? We have a high made here, little range within that wick. We respect it here, pull back, break through, right? This, we violate the zone, but when we come back down here in the beginning of end of January, we we respect this zone as support, right? Here it's respected as resistance, here we respect it as support. We make a higher low right here, right? And if we look at a lower time frame, we could have a zone here as well, right? Because here we reject it as well into the same level. Do you see that? Right? So we establish a higher low, and when we start to look back a little bit, we see, okay, well, look at this. We have a support here at almost the exact same price, right? We have a lot of wicks coming down here, right? We did break through it once, but twice actually, but we came back up and held it as support, right? So all we know is that within this little box right here, we have a lot of interest, right? That's the way. I mean, we can get into the technicals of volume and that sort of thing and where orders are placed and all that, but just as a surface level way of looking at this, right? We have an area of interest, okay? So when we go down onto a 4-hour chart, it's going to start to unfold a little bit better, right? So yeah, so look at this, right? We see again a key level, right? We have all these different touches within the zone. We can even extend that a little bit, right? And yes, I know we do break through it a little bit, right? A couple times, but the point is, like I said, nothing's going to be perfect exactly the way that we want it, okay? We can't expect, if you wait for the conditions to be perfect, you'll trade maybe once every couple months, right? And that's all you're really going to do, right? But we do know this is a zone down here, right? So we made this low, right, off of the previous daily structure, right? This was the one daily high, right? Now we hold this as support, right? So we know that we've established a higher low in the grand scheme of our trend, of our direction, right? So we build another one here, right? We come down here, and yes, we break through a little bit, but this is another higher low. So, and again, you see our zone here on the 4-hour chart. Lots of touches in there, makes a lot of sense, right? But at the beginning of the week, when we come down into this level, right? Let me go to an hourly chart, make it a little bit more easy to understand, right? We see that this is a key level for us, right? We see all the different touches within the zone. It's a little bit above our higher lows, our previous two higher lows. So we know that our overall trend, our overall movement is bullish, right? And so we see a little sell-off into this zone, right? Now I'm going to go to a 15-minute chart because that's what I entered on, right? Now we see a little sell-off into the zone, and I can get into this bearish price action here in a minute. But at the market open, right, on the beginning of this week, we have a big, right? We have a big sell-off, right? But we have a big bullish candle close back up above this big daily 4-hour whatever support, right? Big key level. And as we come back down to retest to retest this level. I know we came back down a little bit further than I would have liked, right? It's about right there. Yeah, so we have a nice big candle close back up above our structure, and we start to slowly make these wicks. You see these long wicks in here, right? Rejecting this zone. It's a break up above and a retest, and we are looking for a trade. Yeah, right about there, maybe a little bit higher, but that's about it. We're looking for a trade back up to this zone up here, right? And so obviously you can see it took a long time, but we did end up getting that, right? Obviously our stop loss is below this recent low, because if we would break this low, that means, obviously we're going to be making new lows, right? So like I said, the 15-minute chart is typically the lowest time frame I will go down to, right? But really, it's the way that we saw this was because of our levels here, right? So it's not showing on that time frame. Yeah. So this is why you need to be focusing on key levels on higher time frames, and then you work your way down to lower time frames, right? And so here's the difference, right, between going short here versus longing off of this, right? Like I said, we have our bias from all the zones that we have made on the higher time frame. So we know that instead of looking at zones, support levels in this case, since we're moving down, our overall trend is bullish, but we have downward price action. We're looking for price action that is rejecting these zones as support as opposed to breaking through and retesting them as resistance, right? So we are looking for bullish rejections. We are looking for a retest, a break, a push above a support to respect the zone, and a retest so that we can go long in line with our overall trend, right? I hope that makes sense. So here, our take profit for this entry, just because this is a key level here, right, doesn't mean we're going to go short here down to here, okay? Because again, like I just said, our trend is bullish. So we can expect, right, we can expect a breakthrough and a retest to hold the level as support to go long, further long, right? And I hope that part makes sense. But again, another way of looking at it is the price action leading up to a zone, okay? So here, and I'm going to have two good examples of this, right? So here, obviously, we come down, establish a nice little support zone down here, build a higher low, build another higher low, and then finally at the market open here, right, yesterday, we break through to new highs, right, relative to this zone, okay? So we break through, come down, obviously retest as support, and then we move up, right? But the point I'm trying to make is the price action leading up into this key level, right? If we think, oh, it's the key resistance, we have to short it because it's going to respect the zone and move down, right? We have to short it, right? The reason why you don't want to, aside from the fact that, like I said, our overall trend is bullish, is the price action leading up to this is extremely good bullish price action, right? Like I said, we build our little support zone down here. We have a higher low, another higher low, another higher low. Then at the market open, surge in volume, eventually we break through, right? Now, if this was very sharp, right, and very sudden, and it was almost vertical, right, like for instance, this candle here, then yes, we would be looking at a potential short position, because if you think about it, right, think of price as like a rubber band, right? When we get stretched so far and so abrupt and quickly, right? We get stretched so much in such a short amount of time, you have a reaction to that, right? So when we have such a large, if we would have such a large bullish candle that just pushes straight up here, right? Let me get a little, if we had a candle from down here that just went straight up, straight up like this, right? Straight up there, we would be expecting some sort of reaction to that level, right? That we would then sell off. Maybe even if our bias is still bullish, we would expect a relatively large bearish candle, initially at least, to counteract that, right? But again, this is really gradual bullish price action, right? Higher lows all the way up to the market open when we get a surge in volume at 7:30. So we know that we're going to have more volume entering the market, right? Now, an example of what I was just talking about, right, with the sharp price action is here, okay? This is a pretty good example, right? So, and again, everything is really relative you'll find that everything is really relative to where you are in price, right? In the in the journey of price, I like to call it. So something that I like to think about is when we're making these zones, right? Like for instance, here you'll see this is another big key level that we have, right? And again, this was really our major one. This is our daily one down there. But something that you'll figure out, the more you look at charts all day, right, is I like to say that major zones, right? So price is on a journey, okay? Price moves up and down. It has trends. It has different patterns. You don't exactly know where price is going, clearly, right? We don't exactly know where price is going. But we do know where the major zones are, right? So imagine price is on this journey, right? We don't know where it's going. We don't know where the final destination is, but we know where the checkpoints are, okay? And the checkpoints are the major zones. And at some point, price has to go to these checkpoints, okay? Maybe it's not the way we expect it to happen. Maybe it's not when we want it to happen or when we expect it to happen. But we do know that at some point, price will go into these zones, right? At least a handful of times, right? So price is on this big, long journey. We don't know the final destination, but we do know where the checkpoints are, right? So basically your job then as a trader is to fill in the blank spaces, right? So again, this zone is a great example of that, right? We don't know exactly where price is going to go, but we do know that this is a key level, right? And you could say, oh, maybe, prices magnetically attract to these key levels, whatever. People like to say different things, but what we do know is that price typically rechecks into these checkpoints, right? That's how I like to look at it, okay? So then we just kind of fill in the rest. Like we break through this, right? We break through this and we have this high up here. You may be thinking, oh, well, we're just going to keep pushing up because we broke the resistance, right? But again, we don't exactly know where the journey, right, where price is on its journey, but we do know that it's going to have to come back and retest into this checkpoint, right, into the zone, and then before it can then continue to move up, right? So again, that's just kind of a little analogy I like to use, right? So anyway, so right here, and we're on the 15-minute chart because it'll make a lot more sense here, right? So we have a pretty nice little zone. We could just do, yeah, we'll just do that for now, right? And again, I know up here we come up, bearish candle, and sort of retest this, right? Again, nothing is as precise or as perfect as you would expect, right? But why would taking a sell position right here, stop above these wicks, right, with a take profit down at our next major zone, why would this sell position make more sense than selling right here, okay? Now here, this is what this price action looks like leading up to this major resistance. And this is what this price action looks like leading up to this resistance. Okay, the difference is, again, like I said here, we have this daily level, so we knew we rejected this daily level, made a higher low, and then push up, right? But look at this. Like I said, the price action, right? We established a nice little support zone here. The price action leading up to the zone is much more gradual, and it's much more healthy bullish price action with a bunch of higher lows. Here, when I was talking about a big vertical candle, that's what we get. I know we have a little bit of a, exhaustion type period here, right? But again, we have a very sharp move corrected by another very sharp move up into this level. And again, like I said, everything is relative to where you are in the journey of price, right? Even though our overall trend is bullish, right? Do you think that this level right here, right, when price has such a sharp, let me delete that, sharp push up into a major zone like this relative to the 15-minute chart, do you think that's a good place to go long because our bias is bullish, right? No, we had such a sharp push up into this level that we need to have some sort of sell-off, right, in order to cool down, right? And you can see we sell off pretty nicely back into our key support here before moving up again, okay? So again, you see the difference in this price action. So if this price action from the bottom of this zone up into this resistance here, if it was like just like this, right, where you zoom in, you have support created, higher low, higher low, higher low, then volume at 730 to push us through, right? If it was like that, where instead of this going from how many hours is that, right, just a couple, a pretty short amount of time, if this took a much longer amount of time and it was more gradual, right? And slowly built up more with higher lows, right? Then we could look at it differently. But again, when you have your the grand scheme of things and your overall trend, right? Within little consolidation periods, you have a bunch of smaller zones, right? Like this on the 15-minute chart. And you kind of just have price bouncing around, testing different levels in order to, right, consolidate a little bit longer before it makes its bigger move, right? So again, the difference with this level versus the other one is, right, like I said, this is such a sharp vertical push up into this level. And this candle right here with this wick, that would be a key sign for me, right? Because, if there was news, sometimes when there's FOMC news, if it's big, right, whatever they do with rates or, some bad NFP number, it will have some pretty big candles, and I understand that. But again, the technicals, right, never really lie. So, we don't know where price is going, but we do know, right, this is a checkpoint, and price is going to come into the checkpoint, right, and have to react to it regardless of what it does, okay? So again, the steep, price action, the harshness of this is what would make us want to look for a short position here, right? So, yeah, so that's just something else that I wanted to show. But here, right? So you see this big. Let me go to the 30-minute zone here, okay? Now, this was last week, okay? And this is a concept that I really enjoy talking about, okay? So a lot of times, right, when I'm looking at US 30 and I'm looking at an index, especially, mainly, I really only trade US indices, right? But if I'm looking at the US 30 around 7:30 market open time to look for a day trade position, right? I will always be looking at Forex Factory to look at news, okay? And I still do that regardless. You always want to know what kind of news is going on, right? But one thing that you'll find, that I have found at least, is that, right, so when you think about what drives the market, okay, do technical analysis patterns actually fundamentally drive price, or do fundamentals like news and world events and geopolitical events, does that drive price, right? So the answer is obviously the fundamentals are what drives price, because without those, we wouldn't have anything visual to look at, right? Patterns that you see are essentially a result of fundamentals, okay? It's not the other way around. And I know people can think whatever they want. This is just the way it works for me, okay? So what I have found a lot of the times is that the technical patterns, right, like, a consolidation and a break and a retest and a nice trading opportunity, when it's a big move and it's a really sharp, steep move like this, it will typically align, right? It will typically align with some kind of news, some kind of fundamental. So the technical patterns seem to always somehow align pretty nicely with fundamentals, okay? And this is a great example of that, right? So again, here's our local high, right, that we have as resistance. Breakthrough, obviously, because we came down and retested the zone. Our trend is bullish. We break through, right? But, right, we build this really, really stressful. This kind of reminded me, or this here kind of reminded me of that, right? But we build this really stressful, painfully boring sideways pattern, right? Now, again, when we're going to make a large move, a lot of the times what you'll see happen is before the move happens, right, in consolidation, you will see a push in the opposite direction, right? And I say, it's to grab orders, grab liquidity, and then we move in the direction, right? And on a higher time frame, you could say this was an example of that up here, this wick, and I agree with that, definitely. But what I'm looking at is this wick right here, okay? Now, when you see what time this was, right, 6 and 6:30, okay? So we know we have this consolidation, right? And so we're thinking, okay, well, this price action here up until this point looks bearish. It does look bearish to me, right? Because we break the resistance that we were trying to break, but instead of coming down and retesting and building nice bullish price action, we go back within the zone essentially. And I know you could maybe lower it a little bit if you wanted to down there, but again, this is the way that I do it, okay? You do whatever works for you. But we build this really painfully boring, like I said, sideways consolidation box, you could call it. And so this is not showing signs of bullish price action. We would want an immediate kind of push up above this level and kind of, you know, having that little just visually that bullish price action. Okay, now right here, when we see, right, this candle closed at 6:30. Okay, this is a 6 o'clock candle. We close at 6:30. When we open, we get a bullish, a top wick, right? We get a bullish. It looks like we're moving bullish, right? So we say, oh, well, that's really good, right? Now, when we close bearish, obviously that's a, regardless of what's going on, that's a bearish sign, right? But so we would be looking for short positions at that point anyway, because, right, we close back below this key resistance. We have this nice little range. It's not perfectly a clean candle range, but it's a good range, right? We don't know where price is going, but we know the checkpoints, right? So this is a key level. We're going to drop back into this key level, which we do, and we, pretty accurately, and then we pull back, right? But what happens at 6:30, right? If you go back and look, we had NFP, right? We had NFP news, non-farm payroll news, right? So what I'm trying to say is that a good technically, right? When you visually look at it technically, a lot of the times you'll see that the good opportunities correlate to big news events, right? And so that was pretty interesting when I saw this, right? I saw this pushing up, and I actually did take a short position here. I didn't get the entirety of the move, but it's all good. So what happened is, we see this push up, right? And we're creating a top wick. And once we see it close bearish, combined with the NFP coming out, right? And we saw what the NFP numbers were, right? We get a huge, and this move happened very quickly, right? We get a big push to the downside, okay? So that's another thing that I like to look at. Obviously, when I'm looking at, day trading positions on the US 30, for example, I'm obviously much more careful when it comes to news, right? A lot of the times I won't even be in a trade when there's certain announcements coming out, especially whenever Jerome Powell is talking, that sort of thing. Any kind of FOMC related news, I try my best to stay out of that, right? But with this, my point that I'm trying to make is that you will notice that technicals a lot of the times really align well with the fundamental news coming out, right? And again, right, so when we come down here to this, back into this level, right, maybe we go a little bit below it, and then it's a little choppy, right? Nothing is going to be perfect 100% of the time, right? Nothing's going to work 100% of the time, okay? You just have to go with what the market gives you. If the conditions are really bad, don't trade. Wait until the conditions are good, but don't expect the conditions to be perfect, because I was like that for a couple years. This is my about 6.5 years into trading now, a little bit longer, right? Close to 7, but 6.5. And for the longest time, I would always just want conditions to be perfect. And then you run into this weird cycle where you're never taking a trade, because then once you get into that pattern where you want things to be perfect, and if you can't understand everything perfectly, then you just close the charts, whatever. And you need to have self-control, but you get into this pattern of just expecting and wanting everything to be perfect, and it never comes. And so instead of adapting yourself to what the market's giving you, right? Because at some point that's what you're going to have to do. If you're not taking a lot of trades because you want the conditions to be better, if that continues to progress, eventually you're just not going to trade, and then you're going to run into some bigger fundamental issues, okay? So instead of just adapting yourself to the market and what the market's giving you, you just want the market to change, right? And you can't change the market. You have to change yourself, okay? So again, I know it's like, maybe it looks confusing, like, well, you could make zones anywhere you see resistance or support, but really it's understanding price as sort of a gradual journey, right? Like I keep reiterating the same point. You don't know the final destination, right? But based on the history of price tapping into these different checkpoints, right? Like I call zones, right? We know where the checkpoints are, right? We don't know where it's going, but we know where the checkpoints are. So based on the history of price tapping into these little checkpoints, we can sort of try to, it's like a puzzle. We can try to see the whole picture when we're missing some of the pieces, right? That's kind of the way that I look at it, right? You don't have all the pieces, but you can kind of fill in and get a general idea of what's going on, right? Like again, here, my long-term goal was that we would, come back down and retest this level and push up, which we did, and then eventually move a little bit higher, right? But if we don't, then, if we come back down and break this level, maybe we're going to have to reassess what we're doing, right? And again, it's just about being fluid, right? You don't want to get too stubborn to where you just keep throwing money in a losing position, okay? because I've definitely done that a lot, right? But yeah, so another thing here, right? I didn't even talk about this yet. I actually did take a short position here. It was a really small position because it was at night when I was asleep, and so you know sometimes, right, depending on the time of day, I don't want to really be risking a lot, right? But okay, so after this move down, right, we come back and we respect this support. We bounce off of the support, right? Generally, okay. Look on an hourly chart. We respect the support very well, okay. Now, when we come up here, make this little bearish doji type candle, right? There is not necessarily a key resistance level here that I'm looking at that we reject and move down. I know if you look here at the 4 hour, you'll see this, right? So this is an interesting thought process here, right? So the way that I look at indices typically is with clean candle ranges, right? And like I said, I don't necessarily apply that logic to this way of trading Forex pairs or gold. With indices, I'm looking at high volume times of the day at like a US Open, right, in the morning, right, 7:30 my time. I'm looking at that. So I'm not necessarily looking for a big long move that could take, the whole day or longer to happen, right? You don't want to hold your trade after market hours, that whole sort of thing, right? So again, we have this resistance here, big bullish candle, up, and we reject. Okay, so clean candle move, right? And this is a clean candle move that's mirroring this clean candle move up until this point. Okay, up until right about there. So again, that's a little support there on our left, right? But from this point, right, until this point, right there, we have a clean candle move mirroring another clean candle move. And yes, we break below a little bit further, right? But my point is, when you come back to pull back, right, this, you could make this like a little 4 hour zone. It's not really a that much of a key level, right? But if you make this zone right here, okay, so we have this zone, right? Now we come back up and retest where the clean candle move ends, okay? So basically it's just a longer way of saying we have a little 4 hour zone, right? But let's look at this on a lower time frame then, okay? So we know that could be a little key that maybe we could have a reversal if we get a bearish close, which we did there. Let's look on a lower time frame, 15-minute, right? So here, I'm sure you're familiar with the head and shoulders pattern, right? But if you look here on the 15-minute, right, we come down, we bounce off of our key support level. And again, like I said, nothing's perfect, right? That's why you don't want to be like, oh, it closed below, we have to go short, right? Zones are large general zones of areas of interest, right? They're not necessarily precise price points, right? I definitely want to make that clear, right? So, but anyway, we move up, right? And we make this little local high here and we pull back a little bit, right? Now, when we push up, right, this is the top wick we were seeing on the 4 hour candle, right? This is the body of the candle. This is the top wick, right? Then we come back down, right, and retest this. So let's make a little line here, okay? Let's just do that, right? This is the wick of the candle, right? This represents the body. This represents the second half of the body, right? So we make the first part of the body, we establish the top wick, then the second half of the body, which is bearish, right? So essentially this is just a head and shoulders formation. And so when we have this little high that's taken out by this big sharp push up with an immediate correction, when we retest, we are not retesting this high, we are retesting the initial high that it broke with this impulse move, right? So if we were waiting for a retest of this zone, then what would probably happen is we would get stopped out and price would keep pushing up, right? But we are looking at a retest of this level, right? Because this is, maybe there's a better, I don't have the best vocabulary, maybe there's a better term for this, but this is just a big impulse move against our local, short-term trend, right? Again, our long-term trend obviously is relatively bullish, right? I mean, if you look on a daily chart, we're somewhat in a large accumulation consolidation type pattern on gold, but again, relatively recently we're looking for bullish, we're looking at a bullish trend, okay? But what I'm saying is here, right, when we get this impulse push up and a break immediately back down, our bias is bearish, okay? And when we get a retest of this zone, right, basically what we're doing is it's almost like we were covering up this little zone, this part of the candles above this level here, okay? I hope that makes sense. So, because again, if we were looking for, this was a very impulse type move, I like to call it, and so we're waiting for a retest of this zone, right? Not this zone, okay? And so here then, once we got a bearish close, it was, I think, about right here. I went short, and again, this price action not too far away from this key support, right? It's all relative, like I said. When you're coming down here, right, you see these big bearish candles. This was really quick move, and you reach this support, you can expect a pullback and a rejection, okay? But when you come down gradually like this after making good, solid bearish price action, similar to how we are explaining this right here, right? You can expect this level to get at least temporarily broken, okay? And so that's what we did. We went short there, and we got out at the next level, okay? So again, I hope this little way of looking at this price action makes sense, right? Because, yeah, I've reiterated the same point, but again, yeah. So really, when we're looking at zones, we just need to zoom out, look at the bigger picture. You can see we had a major zone up here, right? So obviously this was the local high that we were looking at. This was the NFP news, right? But you can see this gets, why did we pull back here? Well, because we have this nice zone here on the 4 hour that goes back pretty long time, right? So yeah, so really what you're looking for is you're looking for large, and I guess I could actually extend that. Remember this 4 hour zone we were talking about, right? Maybe that has something to do with this, right? But anyway, it's not the point, right? So you're looking for levels, areas of interest, I call them, right? And your goal is not to short every single resistance and buy every single support. Your goal is to establish the checkpoints, right? Like I like to call it on the higher time frames, right? You make checkpoints here. Like this is definitely a checkpoint. This is a key checkpoint. This is a key 4 hour and daily chart checkpoint, right? It's just a weird way of saying zones. And right? You don't know where price is going, but you know that these zones are key, and price more often than not will come back into these zones at one point, at some point, right? Maybe it's not when you want it to happen. Maybe it's not the way you want it to happen. But again, when you have the little checkpoints, you have the zones on your chart, and you have them there, and you see the key levels, and then you combine that with looking at the price action leading up into those levels, combined with the history, right? Because here's the thing, you don't know the future journey of price, but you see the past. And so you use the past to help you establish a hypothesis for what the future is going to do, okay? So it's like if someone is on a certain path and they have different patterns of the way they walk, and they like to make turns when there's, this kind of scenery, that whole sort of thing. It's a weird analogy, I know, but you use that to establish patterns, right? Historical patterns that you use to create a hypothesis for what they're going to do in the future, right? Right? I mean, if someone, every time they see, a big oak tree, they like to take a right turn, right? Eventually, over time, you're going to pick up on that and be like, oh, okay, because you're following, right? You're following the journey, right? And you pick up on the patterns of what they do, okay? And that's kind of the way that I like to look at charts and look at price, right? So, again, you combine the short-term price action, right, with reaction into these zones, and you use that to look for probable entries, right? I think this was a great example for us to look at here, right? This zone up here, right? Because again, yes, you can say, well, we rejected off of this support, we're going to keep going all the way up to here, but this price action is so sharp and so abrupt and so quick that you need an equal reaction to it, and that's what we get, okay? And then after we get that reaction, right, to sort of, slow down and cool off in a sense, then we reject, or you can say reject, support, whatever. We respect this support and we push back up, right? So again, that's just kind of a little taste of how I like to look at zones. Can always pull up US 30 here and look at that as well. So here on US 30, right? So yeah, you can see this, just what I was talking about. within this, right, if we're looking at price from this low up to here, okay, this pattern here, where is our key level, right? I have it on the chart. So obviously this level right here, okay? So obviously US 30, huge, huge, huge uptrend, okay? We've been in an uptrend for who knows how long. I mean, sometimes I can't understand how it just keeps going up, right? But it doesn't make a lot of sense when you look at the economy, right? But anyway, so when we take that into account, like we did with gold, I know gold's uptrend is not nearly as clean or as nice as US 30s. I get that, right? But nevertheless, we're still in an uptrend, right? So we have a low here, right? If we're just looking at this level up to this level, okay, we have a low. Higher low, right? We know we're bullish, right? We're moving up. Okay, when we're looking for a key level, we're looking for an area that has a lot of touches into that area, right? So here's a great example, right? We have support, we're teasing it, right? We push up, break through below. We have a new level here, come up, break through, retest a support again, break through. This candle comes down into the level to retest it. I remember looking at this on Friday, and if you follow me on Instagram, you would have seen that when I was saying that, again, this is just what I was talking about on the gold chart, right? Before we can get a nice breakout, okay? So I know we got a breakout before we got a pullback, but look at this. So here's our local resistance. Yes, we break above, right? So you would think, oh, we're going to go long, put a stop loss underneath the previous candle, right? We're going long, okay? This is where that becomes dangerous, okay? Because so when we establish this resistance, right, we come back down, right? And we have a very sharp push to the upside, okay? Now, if you're looking at this saying, I'm going to go long, that's a really stupid way to think, okay? Because, right, I know we broke above the high, but relative to the recent price action, this is overextended, okay? Like I said, price is like a rubber band. So, yes, we get a sharp push down and a sharp move back up to correct it, but we have 1, 2, 3, 4, 5 pretty decently sized bullish candles in a row. If you think that you can then get 5 more just like this, right? That's a very ignorant way of thinking. Maybe if a couple times you'll be right, right? Price will go your way sometimes, right? But to be safe, right? Again, this is our key level here. We have so many touches into this zone, right? You need to think, okay, well, we're a little bit overextended to the upside. My bias is bullish. I know we're going to be looking for a long position, but I think we have to pull back first, okay? Where is a reasonable place for price to pull back into? Is it down here? Is it, down here somewhere? No, it's in this key level. And look what happens, right? Now I know it's maybe a little bit off, whatever. The point still stands. After this big impulse move up to break out of this local resistance, we get a pullback into this key level, okay? We pull back into the key level, and then once we push back up, right, back above this resistance, right, and this resistance up here, we have our breakout to the upside. I know it was a little short-lived, but the point still stands, right? If this price action leading up to this resistance was like this right here, right? If it was more extended horizontally, more drawn out, and it was less vertical, then we wouldn't be looking for such a large pullback, and we could take a much more logical and reasonable long position, right? Because we know that we don't need to have such a sharp pullback because we didn't have such a sharp movement up into the break of the resistance, right? Because again, when you're looking at indices, right, like I want to catch high volume moves. I don't want to be trading in times like this, right? And so when you have such an overextended, whatever you want to call it, move with no correction, right? You're basically anticipating that without correction, we're just going to have this move, right? It's like if you deleted this little bearish candle, right? And it was just this breaks out and is immediately followed by this. No, it needs to correct itself, right? So again, we don't necessarily know the journey, right? But here's our checkpoint here. Here's our zone. We do know that relative to this price action, price would need to come back into this zone, checkpoint, whatever you want to call it, and pull back a bit, establish new support before it can continue the move up. Okay, so that's a point I definitely want people to understand, right? And again, why are we not, when we break down here and retest this zone, why are we not going short, right? Why did we not sell and take profit down here? The reason why, again, zoom out. What is our trend? Our trend is bullish, right? we are extremely, extremely bullish, much more than we are on gold. Okay, so that's kind of that thought process. Okay, um, yeah, again, and then when we look here, right, we get another breakdown. This is similar to maybe somewhat similar to the gold trade with during NFP, right? Now we get this big push down with a sharp push back up immediately into the zone. Okay, now this is much different because we got a nice breakout, which was very short-lived, with another higher low, and then a breakdown back into this consolidation pattern, right? So from here to here is our consolidation box. Okay, we get a breakout, short-term break, short-lived breakout above, right? Come back down to retest as support. We think we're going to push higher, right? Lower high and break down back into the consolidation. Okay, so after that happens, then when we have a push back up into this resistance of this key level here, then we can look for a reasonable short position. Okay, now I know obviously again our trend is bullish, right? But the reason why we had even somewhat of a rejection here and we did not back here is because of this. Okay, right? Everything is relative. Okay, so yeah, and again, this was very sharp price action that was drawn out. We needed a big pullback, right, before we can continue the move to the upside. Okay, and again, right, here, this is very messy price action, right? Like I said, it's not going to be perfect all the time. Price is not going to do what you want it to do all the time. Maybe you took a short position here and got stopped out. Maybe you were looking for a long and it just bounced around and you got frustrated. But eventually we expand and we open up, right? And that's what happens here. We get another move back up above this high that we needed to break last Friday, right? And so we get a move above there and we slowly pull back down into this key level again, right? Once again, see this? We pull back into a key level before moving higher. So if you're not looking at key levels and you didn't have this zone and you just had a little zone down here, right? And you're just like, oh, well, we have to come down to this support before we can move higher, right? We have to come down to this level. You would have never gotten an entry, right? Because you would have been waiting for something that was not logically going to happen, okay? Because everything is essentially dependent on the larger levels, right? You have to zoom out, see the whole picture, okay? You can't just look at this, right, and say, okay, well, this is our support down here. We have to come down into this support before we move up, right? You have to see the bigger picture, okay? Because I promise you, these zones, right, when you make this these zones and you see all these touches in this level, right, it makes so much more sense. It really makes so much more sense because then when you see certain price action like this on Friday, I was expecting Friday morning a breakout, right? That's what I was hoping for, and we got a late morning one, right? But again, the price action leading up to the resistance that we needed to break, right, was not price action where you would be comfortable going long, right? You would need some kind of pullback first to pull back and cool off before you can continue the large push to the upside. Okay, so let me go. Yeah, I mean that's really it. That's really it for now. We can go back to gold. Yeah, and so we'll see what gold continues to do here, right? But again, I hope those the logic behind those entries makes sense. Especially this one here. That was a pretty interesting one, right? But yeah, that's just generally a way that I like to that I've grown to read the charts, right? Basically, any kind of Forex pair, if I'm trading Bitcoin or any crypto pair, this is how I look at the charts, right? With indices, I like to look at it a little bit different because I'm not really taking long-term, like intraday type trades, especially not swing trades on indices. But so I look at it a little bit different with that. I'm more open on indices to looking at clean candle ranges and that sort of thing. But when it comes to Forex pairs and gold, and gold's really the only metal I trade. I've never really traded silver or anything like that, but I look at it a little bit differently, right? So, so I hope that video is helpful, and we'll definitely have some more when we get some more good price action.